As 2019 wraps up, mortgage rates are sitting about a percentage point lower than they were at the end of 2018. That's good news for homeowners, but there are also a few troubling signs ahead that we want to talk about right now. And joining us right now to tell us what we need to be watching is Tendayi Kapfidze. Did I get that right?
Yeah, you got it.
Got it close? Yeah. Chief economist at LendingTree. It's good to see you.
Good to see you guys.
I want to go on housing. I want to go to mortgages for a second, but
Yeah.
your expectation for how you think housing prices across the country are going to land in 2020.
I think we still see prices decelerating.
Okay.
Probably, I think this year they're around 3.4%. We might get down to around 3% next year. And a lot of that is because, affordability challenges are really making it hard for people to get into these homes.
Right.
So it's just unsustainable, the rate of home price increases we've been seeing. If you go back to 2012, which was the bottom of home prices have accelerated at about 3 times the rate of income. So I think we need to see some of that momentum slow down, and I think it happens in 2020.
What's the reason for the rise in home prices? Just lack of inventory, or is it just way people are moving, or what's causing the surge in home prices? Yeah,
so inventory is a big part of it. You see that home prices are rising faster at the lower end than at the higher end, and the lower end is where we have most of the inventory challenges. Right. For various reasons.
I keep hearing that inventory supply problem is going to change in 2020. Is that the case or not?
I don't think so. I do think we get an acceleration in housing starts, so there'll be more new homes on the market. But the new homes market is only about 10% at most of the total home housing market. So what we need is more people kind of moving out and moving up, and that's not happening as much as it used to happen.
Why?
People are staying put much more than they used to in the past.
Why do you think that is?
I think a part of it is that, there's not as much labor market mobility. And some of it is you don't necessarily have to move so much anymore to get a new job. A lot of jobs you can now do remotely. And so kind of that impetus for moving, which a lot of times used to be work-related, has diminished with the digitization of the economy.
Okay, what's your expectation for mortgage rates? Because that also impacts all of this, obviously. That's your business.
Yeah, so the rates picture, rates is going to be the big story. It was the big story this year. They fell a lot, which gave a boost to the housing market. But rates are really all about the trade war. And so, what's my expectation for the trade war? I don't think anybody has a clear picture. What I do think for rates, because we've had this 100-point decline since last year, it's difficult to see them declining again by a similar magnitude. I think we actually get a slight increase in rates.
We just showed a chart of the 30-year fixed. What percentage of mortgages today are 30-year fixed mortgages? I'm assuming it's got to be a very low number.
A 30-year fixed mortgages?
We just showed a chart of a 30-year fixed mortgage, right?
Why do you think it's a low number?
No, upwards of 90, 95%.
Is 90, 95%?
Yeah.
Because I would have thought that people would have been...
And by the way, that's a brilliant move with rates so low today.
I would think it is, but I had this view because of all these people that I seem to know. Maybe I know the wrong people.
You know different people, I think.
I know the wrong people who are trying to...
You're talking about people in high-end.
Who are trying to do all these crazy... they're still doing 5- and 7-year arms and all these kind of cockamamie operations.
Yeah, well, because they can arbitrage those over time. Yeah.
And what happens with the ARMs is that, so if you look at the average loan size for a fixed rate mortgage, it's about $250,000. The average loan size for an ARM is about $700,000. So because you're in New York, you probably get a sample of people
hanging around with the wrong people.
700,000 is the low end.
Look, that requires a whole lot of work and effort. Buffett himself has said that that's about the best deal you can get is a fixed 30-year mortgage with rates this low. That is, by the way, that's a loan that you can call and the bank can't. You can pay it off early anytime you want and not pay the associated additional charges.
Charges on the early repayments.
What about credit? I mean, one of the things the banks are still pretty tight on is lending after the last Great Recession. Are you seeing any of that change, or is it still pretty tight?
I think it's, I wouldn't necessarily say it's tight, right? It's tight compared to the pre-crisis period, which, we saw how that ended. But yeah, banks are being much more, stringent around who gets loans. So even with the ARMs that he was speaking about, you still get, underwriting standards are much higher than they used to be.
Okay. Thank you. This is fascinating. I feel like I learned a lot. Also, I learned a lot about the market, but then I learned a lot that I'm hanging out with the wrong people.
With different people. Also, that the internet is disrupting yet again. The thing about how people aren't moving as much because you could work from home, you can work remotely. That is a fascinating dynamic that I hadn't really thought about.